Hello everyone, welcome to the Channel channel. It's been 2 weeks since I did a stock video. It's because I was on vacation, but I'm back now with 4 F&O stock ideas for you, probably potentially for swing trades, and also one mid-cap stock idea, which is a growth story, especially in India. It has been talked about in social media for quite some time, but I think this is the perfect time to buy this mid-cap stock idea. But I'm sure you're excited for the F&O stocks. But before that, what I want to start off with is to give you an outlook of what Nifty is doing. And we'll take a look at what Nifty is doing with respect to the US markets and the Europe and the Western markets. And then we'll look into different stock areas. So I'm sure you're excited. Hang around to know that one mid-cap idea because it's somewhere in the middle of the video. And I'm sure you're excited for the F&O stocks. So let's get started. So I'm here with the Nifty Outlook first. And here, if you see, I am on the quarterly charts of Nifty on the left-hand side. And I have the Dow Jones on the right-hand side, which is also the quarterly chart. Now, there's been a lot of pessimism in the global markets thanks to the inflation, and there has been also a lot of talks, especially this weekend, about Credit Suisse, and there's talks about whether it's going to collapse or not. Now, keeping all that aside, I want to show you what is Nifty actually doing. Now, since the top which we made for almost a year back, like last October is when we topped out, and since then, last 4 quarters, Nifty has been going sideways. But whereas Dow Jones has fallen in the last 4 quarters, Dow Jones has fallen really bad, or in fact the S&P or Nasdaq, if you take all the markets across the Western markets have fallen really bad. Now just for a comparison's sake, if you see Nifty has fallen just 8% from the top. We did fall more, but we recovered this month. We've completely had a very strong inside bar on the quarterly charts, whereas on the Dow Jones, we've fallen 21%. Now, whether we've decoupled or not is something that we'll have a separate discussion about, but definitely we are outperforming the global markets. So which means India is in a very strong position, especially compared to the global markets, which means money is flowing to India, whereas money is not flowing into the equity markets in the US, right? So keeping that in mind, I want to just conclude saying that Nifty or Indian markets is definitely looking really strong compared to the global markets. So even if there's a very severe crash, let's say tomorrow there's a strike or there's probably a war gets really worse, or if some banks collapse in the US, and by chance if the US markets collapse, I think we will also fall, but we will not fall much like the US markets. We will probably be falling much slower than the US markets, and we might probably recover fast as well, because that the demographics in India is really strong. We have been doing very well compared in terms of GDP, in terms of a lot of other factors. We've been doing really well. Companies have been posting really good profits, and we've been having inflation, but unlike the Western markets, our inflation is just normal standard, what we have usually in India. So keeping all that in mind, stay invested in India, continue your SIPs, and continue your buying your large cap stocks or whichever stocks you're interested in, and do stay invested in Indian markets. Okay, so that's quick outlook on the Nifty, and as usual, I'm going to take a look at the short-term charts and also give you a perspective. Now, this chart that I have here is the ratio of Nifty to Dow Jones. Now, this chart basically tells that Nifty had a very strong performance between 2003 and 2007. It did outperform the global markets or the US markets. And then what happened is since 2010 we've been we've been performing almost the same as US markets, but now the US markets are falling, whereas we are not falling much. So this ratio is going up. So this basically tells that when you compare the strength of the US markets to Nifty, Nifty has definitely strong. Okay, that's which we already spoke about. Right? Just keep the chart in mind, because probably for the next 3 to 5 years, we will do much better than the global markets. Okay, now taking a look at the daily charts, what happened on Friday or what happened this week is we had a fall and we've come and tested this horizontal support over here. I've spoken about this quite a lot. This support, I've been speaking about this, probably since when we broke out here. I've been highlighting this, and we have reversed from this major support zone on the daily charts. Now, this is probably a potential channel in play. Channel means, so I've connected that point there, this point here, and this point here, and this point here, and we have a clear channel in play. Now, this parallel channel might hold on at least for some time, at least for a few days, if not for a few weeks or months. But I think that we will probably bounce from here and we will head higher from here, right? Even if we gap down on Monday, probably going to retest there and we might take some support there. But if we break the zone, then probably we might test the zones of 15,600 or even retest the lows here, right? But for that, I see slim chances, but we might grind around some time. I don't see us really going like the US markets. I don't see us falling as strong as the US markets. And I think we might do, pretty good compared to the markets. Now here on the weekly charts, if you see, because of this green candle that we had on daily charts, we have a strong wick on the weekly charts. So weekly charts also looks like we are, pretty good there, and I don't see a major problem. But the only problem I see, at least in the short term, is we have this major support, major resistance here around the 17,190 to 17,300 levels, and that's going to be a level that we have to take out. If we take that level, and if we break that level, and if we head higher, then we are probably potentially heading higher towards 19,000 levels again, and we might probably even make all-time highs again. Okay, now this is all, there's a probability in markets. Don't just jump and don't just buy because I'm saying. Keep risk in check, and you might just do well going forward. Okay, so that's my Nifty outlook. So let's take a look at the F&O stocks. So in the F&O stocks, I'm going to just discuss the technicals. I'm going to give you short-term ideas as to how you can take, short-term swing trades, looking at hourly charts, and how you can really set short stop losses and take those trades. Okay, so let's take a look at Sun Pharma first, which is the first stock for the day. And here, Sun Pharma, I'm looking at the daily chart over here. Now, in the daily charts, if you see, we have a clear breakout here. This horizontal resistance over here has been broken out. So this is a 5 months consolidation. We had a massive candle here, but then we corrected all the way and we retested that zone over here, which is also the previous swing low. So effectively, we have not broken the swing low yet over here, and we are attempting to break this horizontal 5 months consolidation over here, and we might head higher. Now, there has been slight increase in volumes in the last few days. I'd love to see more volumes, but I think that volumes will come probably next week once we break out and we head higher. Now look at also the CCI and relative strength, which I usually don't post on YouTube videos. I do post on Twitter sometimes, but here I'm just trying to post and show you how the CCI helps you in identifying bullish stocks. Now here CCI is turning bullish on the daily time frame. We did turn bullish first time after here, and then since then we've not gone below -100, which shows that this stock has been strong. Also, relative strength also has been strong. We have above 52-week average, and we are doing well over here. Now, this is from a daily chart perspective. Now, from a daily chart perspective, if you want to enter the stock, you enter current market price and keep a stop loss of 890. Right, now, 890 is this zone over around here. Now, here I'm being a little aggressive because in case the market reverses, you might get off really out quickly. And this is also, remember, we had this breakout over here, did retest this zone over here, and we are kind of reversing. So 890 is a stop loss or 6.3%, and we look for targets of 1,140, right, which is around 3 times the risk that we're taking. And yeah, we might get much higher returns, but given that the markets are weak, try to take a call when you want to take profits. Don't just keep it even if it goes in loss. For my sake, at least, do keep your stop losses and ensure you don't lose capital. Okay, now I'm going to show you how would I trade in case I have to take a short-term trade in futures or in options. Okay, I'm not getting into what options you should buy or how you should buy the futures. That's for totally another time. When I have time, I'm going to make such kind of videos. But for now, I don't have the time. I have a full-time job. So we just take a quick look on how I would trade in case I would trade Sun Pharma in a F&O stock, right? So I'm switching to the hourly chart here. And hourly chart also, if you see, we have a nice rectangle breakout over there. We had amazing volumes coming in, and we had a complete retest, and then we are moving again here higher, right? So this is hourly chart, and from hourly chart perspective, I'm going to buy the stock at current market price, either in futures or you buy an option according to what you want, and then I'm going to keep a stop loss around 925, right? 925 is here, and current market price is 948 around. So there's just a 24-point stop, which is around 2.5% stop loss, right? And I'm going to look for targets of 1,025, right, which is around 3 times the risk. I'm going to look at also 1,140, which is around 8 times the risk of the current market price or the stop loss that we have. Right now, that's how I would take a position on future options. Now, in options, you can do multiple kinds of trades, right? For example, you can sell the options. You can sell the options over here, 890. Put options because you're quite away from the price, and you might tend to get some really good premium over there. Or you buy a naked call option over here and you go long directional trade. Or you can also sell the put option over here, which is around 920. You sell those put options. There are multiple strategies too, and we're getting into them, but these are just different ways. Okay, now that's a high level view. You can also apply the same for the next 3 stocks, other 3 F&O stocks, but I'm not going to discuss them. I'm going to keep it purely from a cash trading perspective, so that we focus on one aspect in this video, short video. Okay, so that's the first stock, Sun Pharma. The second stock today I'm going to discuss is Airtel. Remember, Airtel has been doing quite well. Since that breakout we had a long time back, and this is the recent setup that I'm having. So on the weekly charts, if you see, we have a beautiful rectangle setup which we are breaking out over here. Now again, some people might say volumes are not there. For me, this volume here has been very good, and we broke out on Friday. We had a really good candle, because of which volumes have not come. But if you see in the hourly charts, we have some really good volumes, right? For me, this looks like an excellent setup. Bharti Airtel, you can do a SIP, you can buy a cash perspective, or you can do even F&O trade here. But for now, I'm going to discuss F&O. What I'm going to do is buy the stock at current market price, keep a stop loss around 750 odd, which is around those levels over there, right? And we're going to look for targets of 900 first, and then a target of 990, which is 2 times the risk and 3.8 times the risk when it comes to 980 targets. So that's the Bharti Airtel trade. Now, remember, both these stocks are horizontal breakouts. Now, if you're a beginner and if you're struggling in markets, focus on this horizontal breakout strategy. There's also a video that I made. Do refer to that. But this is a simple setup as a beginner that you can look forward to and you can make money. So don't forget to watch this video and start your trading career as well. Now, that's the second stock, F&O stock, that I want to discuss today. Now, if you do like my analysis on these F&O stocks, don't forget to subscribe and like to my channel. But before we go into the next two F&O stocks, I want to discuss the mid-cap stock idea, which looks really, really good, which is also a horizontal breakout from a very good consolidation, and it is in the QSR space, or quick service restaurants as they call it. And this is a mid-cap stock that we're going to discuss. That's Sapphire Foods. Now, remember, Sapphire Foods is a franchise company. It operates the Yums franchise operator, and it has franchises or shops in India, Sri Lanka, and Maldives. Now, it serves two main brands, right? So one is KFC, and the other one is Pizza Hut, which are the two major brands, or which some of the excellent brands you can call it. And they have franchises of these. And they also have Taco Bell, but just 6 restaurants, so not a very significant share. But overall, if you see, this company has 616 restaurants of KFC and Pizza Hut across India, Sri Lanka, and Maldives. And it is Sri Lanka's largest international QSR chain as well. Now we'll jump into the the financials shortly. But what I want you to note is that delivery and is around 40% of all their orders are delivery. Now, I'll also mention a short point as to how this delivery is, increasing their EBITDA margins or increasing their profit shortly. But keep this in mind. This is a growth story. Sapphire Foods is an Indian growth story, and I feel we have massive potential in terms of the QSR space or quick service restaurants. A lot of people are starting to eat out. In fact, have been eating out, and this share is only going to increase. And we know India is doing pretty well in terms of the money that people have in hand is increasing every day, every year. And a lot of people from rural areas are starting to, eat at these restaurants. Though not a good thing, I feel it's a wonderful thing for the company, and the company might do well. So let's take a quick look at KFC India's operations for Sapphire Foods. The first thing I'm going to look at is the total restaurant count. So total restaurant count since 2020, 2021, 2022, if you see, we've gone from 187 to 203 to 263 to 281 restaurants of KFC, which this company is running. So this is a pure growth story, and that's why I'm really, really interested in this stock, because the current market price is really good. Fundamentally, it's good. Technically, it's good as well. Now, the average daily sales per restaurant also has gone up from 130 crores to almost 144 crores, right? Now, that's also a very, very good number. And restaurant-related revenue also, you can see we've seen some good jump over there. But what I want to focus today is on the EBITDA margin. Now, that's where actually stocks make money for people like us, right? When a restaurant is making more profits, which means the share price is going to go much higher. So in this EBITDA percentage, if you see, we've gone from 13% to 14% in 2021, and we had we went up to 19.5 and we went 20.3%. Now, as and when the number of restaurants grow, we are going to see economies of scale kick in, and we also, with the number of deliveries increasing, we are going to see a lot of the margins increasing. Now, I'm not saying this is 20% will go to 50%, but even if you hover somewhere in 23 to 25% margins, I'm not sure if that's feasible. To let me know. But I think as these margins increase and the number of restaurants increase, we are going to see a very, very good PAT kicking in because of the operational efficiencies and all that. And this company might do really well. Now, that's from a KFC perspective. Now, switching to Pizza Hut. Pizza Hut also has increased the restaurants from 170 to 235 restaurants. We've also seen an average increase in sales. Again, the EBITDA margins have gone up from 7% to 14.8%. Now, remember in KFC, we've gone from 13 to 20%, but here we've gone from almost doubled the EBITDA margins from 7% to almost 14.8%. Now, how much scope is there in terms of the EBITDA increase is something that we can debate. I'm not sure yet, but all I can see is there's an increasing trend in everything: revenue, profits, number of restaurants, EBITDA margins, average revenue per restaurant. Everything is increasing, and I feel, given the opportunity that we have in India, this can be a phenomenal growth story. Okay, so this is what I want to discuss. So if you see the average size of the restaurant, in 2019, the average size of a restaurant was 2736 square feet. This is square feet. And then that has now come down by 1500 square feet. On average has reduced by 1500. And now, right now, we are, it has reduced the average restaurant size by around 45%, right? Now, because of which, the restaurant EBITDA has gone from 12.7% to 20.3%. So basically, the average size of a restaurant has gone down because of the deliveries increasing, and they're trying to optimize the cost. Real estate basically costs you have to pay rent, and the lesser the size, probably, and the more the sales, you're going to have a much higher profit margin, right? So it's simple maths here. The same with Pizza Hut as well. Now, Pizza Hut, we've gone from 2427 square feet to almost 1200 square feet currently, which is again a 45% reduction in this overall size, and because of which the restaurant EBITDA has gone up from 7.5% to 14.8%, right? Now, this, I'm not sure how much again this will decrease, but these are definitely positive signs. The company is looking various ways to cut down on costs and increase the EBITDA margins, right? So that's from the presentation that I picked up from the company's presentation. Now, if you want to know much more about this company, don't forget to check out their annual presentation, annual reports. It has some really good information. Now, quickly just showing you what this company is in terms of financials. The company is in the mid-cap space around 9,400 crores. PE is quite expensive, but also Devyani and Westlife also has a high PE. So overall, the industry itself has a high PE. Now, this PE might reduce as and when the PAT increases, the PE might reduce, given that the share price doesn't really increase drastically, right? So promoters hold a 51% share. The sales has been really good, 68%, and also price sales is just 4.81. ROC and ROA pretty good. I mean, not very good, they're average, but they might increase as and when we have more number of stores coming in, right? So promoters hold a very significant share. FIs have reduced a stake, while DIs have increased a stake here, and public has reduced a stake from 24% to 23.65%. Okay, so nothing interesting there, but look at the overall sales growth year on year, right? So we were at 957 crores in 2018, and today we're almost doing, twice that number in 2019, right? Operating margin has gone up from 2% to almost 18%. And if you see, they were not profitable since 2020 until 2021. They were not profitable, but this year, last year they turned profitable, and now they are making more money, right? So the company is really doing well. And the sales growth is 13%, profit growth is 45%. So overall, for me, these are excellent numbers. The growth story of India. If you do believe in the quick serve service restaurants, and if you do know that this can grow, do invest in this company. So balance sheet also looks good. And they have increased reserves almost 944 crores, and the debt is almost around 789 crores. So for me, the debt is concerning, but do note that the reserves also has been pretty good. So overall, for me, not a problem there as well. Taking a look at the technicals. Now, from a technical perspective, I'm looking at the entire chart right from the time the company was listed here. So the company was listed somewhere in 2021, and we had this major here horizontal resistance here. I've been waiting for this resistance to be taken out. Now, remember, in IPOs, you should always invest only if the IPO listing price has been crossed. And if you get such kind of a base, then definitely a must go, because IPOs can really do very well, especially if the growth stories. Right, so CCI has crossed 100 on weekly this month, here around this week, and here relative strength is hitting a new high. And for me, this is an excellent setup. We are consolidating around that highs over here. Now remember, the entire Indian market has not been doing well, but this stock has been going up and up and up, right? So there is something definitely happening, and money is flowing into the stock. So for me, overall, this is an excellent company from a technical perspective as well. So I probably buy this at the current market price of 1500 levels. The stop loss of 1350, which is just around 9.5%. I'm looking for targets of 2000 here, and which is 3.5 times or 3.7 times the risk that we are taking here. So given that the stop loss is just 1350 and the current market is 1480, I think this is a very low risk bet from investing perspective, or even from a trading perspective. And if you do want to hold the story for long term, you can continue to hold the stock, but try to ride the trend as much as possible, because you never know when a stock reverses and comes back down. Okay, so that's the mid-cap I want to discuss today. Now, so we discussed two F&O stocks and one mid-cap. So two more stocks are left in F&O space. Let's take a look at them before we call it a day. So Ipca Lab is the next stock I want to discuss from F&O perspective. Now, this stock, the entire pharma space, in fact, has not been doing well. A lot of stocks have fallen a lot, but Ipca Lab also has been a downtrend. But now I feel that we formed a double bottom here, and we probably had a pivot break over here, and we have had a very good closing for the week. On the weekly charts, especially, we're doing very well. So I buy the stock at current market price at 915. keeping a stop loss of 880, which is around 3.8 times. So I'm keeping it here, around here, this swing low over here. Now, if you're conservative, you can also keep the stop loss around here, which I would recommend if you're especially a beginner or if you're still learning about markets. But if you're aggressive, then you can keep your stop loss over here and try to see if the stock heads around 1000 levels, which is where my target is. That would be 2.4 times the risk that you're taking, and try to book profits around there. Now, if you break this channel, if we head above this 1030, 1040 levels, then we're probably entering a new long-term uptrend, and this stock might do well in the long term as well. So take a call once it crosses that level and see what happens here, and then take a call. So that's the third stock from the F&O space. And the last stock we want to discuss today is Maruti Suzuki. Now, the entire auto space has been doing well, since the last few months, and the stock has been consolidating for some time now. So Maruti, here I am in the daily chart. If you see, we've been going up. We had a very strong uptrend since the breakout over there, since a strong candle, and we've been going up. And I think we are testing this channel here around at this bottom of the channel. And this is the resistance of the channel. And I think this is a good low risk setup again, with a very minor stop loss of 3.5%, which is just 278 points. And you can buy at current market price. And we're going to look at targets of 9450, which is around that high, and 9800, which is around that channel top over there. So these are two targets. 9430, the risk reward comes to 2.2, and 9800 risk reward comes to 3.5. Okay, so these are the 4 stocks I wanted to cover today. I'm sure you would love these analysis of mine, and these F&O stocks. So I really recommend that you keep your risk in check. And if your stop loss is hit, do get out. Do not hold on to F&O positions if your stop loss is hit. Cash is still fine, because these F&O stocks, they might come back again, but do not if your stop losses, do exit and do not hold on to them. You might end up in big losses. Okay, so if you did like my video, don't forget to share this video with your friends, and do let me know in the comments if you want more such F&O stock videos. I don't do them because they're risky, and I don't want my followers to get into losses. But if you do like my analysis, and if you do stick to your stop losses, I can do more such videos. But do let me know in the comment section. I'll leave you here. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.